Hi, I'm Tim Hamilton with StellarQuest Real Estate, and in this video I'm going to be talking about supplemental property tax bills. And in 1983, the governor signed the Supplemental Real Property Tax Law, which was designed to help with California schools. The law states that the assessor is required to reappraise a property's value anytime the property changes ownership or there's new construction done on the property. And in this video, we're going to primarily be focused on how the law applies to changes in ownership. So the Supplemental Property Tax Bill essentially reflects the difference between the previous owner's assessed value and the new homeowner's assessed value. So just to give you an example, let's say somebody owned a home and they purchased it for $300,000 and they just sold the home to a new homeowner for $700,000. There's going to be a difference there in the assessed value of $400,000. So if the new homeowner's assessed value is higher than the previous homeowner's assessed value, like in the example that I just gave, then the new homeowner is going to have to pay the supplemental property tax bill. If the new homeowner's assessed value is less than the previous owner's assessed value, then there is a chance that the new homeowner could get a tax refund. So basically, the supplemental property tax bill is a one-time tax that ranges from the date the new homeowner took ownership of the property to the end of the tax year, which is on June 30th. Supplemental property taxes are prorated based on the number of months between the effective date and the end of the tax year, which is June 30th. The effective date is the first day of the month following the month in which the change of ownership took place. So that means if the change of ownership took place on March 21st, then the effective date would be April 1st. So now we're going to run through just a real quick example just to show you how, supplemental property tax bills are calculated. So let's say that the assessor determines that the supplemental property tax bill would be $1,000 for a full year. Let's also say that the change of ownership took place on September 15th. So when we're calculating the effective date, we go to the first day of the month following the month in which the change of ownership took place. Since the change of ownership took place in September, our effective date would be October 1st. Now that we know that, we can see that our proration factor would be 0.75. So what we do with that is we take the proration factor and we multiply it by the amount of the supplemental tax bill for the full year. So we take $1,000 and we multiply it by 0.75, which means that there would be a supplemental tax bill of $750. It's extremely important for you to remember that your supplemental property tax bill is on top of your annual property tax payments. So if you've set up an impound account with your lender for them to pay your annual property taxes, they are actually most likely not going to be paying your supplemental property tax bill. So it's very important for you to understand who is responsible for paying that bill. So if you have any other questions about supplemental property taxes, feel free to let us know. We also have this very helpful form here called the Notice of Your Supplemental Property Tax Bill, designed by the California Association of Realtors. And this form is used to give to buyers just to inform them and let them know that when they purchase a home, there's a high chance that they're going to be receiving a supplemental property tax bill in the mail. So if you have any other questions about real estate, feel free to let us know. You can find all of our contact information on our website, StellarQuest.com, or you can simply dial this phone number here and get a hold of us that way as well.